astronomical potential. So the current RWA industry from a tokenization perspective is tiny right now in terms of it's really a drop in the ocean of the true potential. It's estimated to hit $10 trillion by 2030 for an idea of growth potential of where we are.
What's up, everybody? Good morning, good afternoon, good night. Welcome back to BitLab Academy. My name's Kelly Kellum. We've got to talk about what I think is one of the most exciting and potentially explosive sectors in the crypto ecosystem, because it's not only discussing crypto, it's discussing blockchain and the true utility and the power that comes when you start to think about different ways that you can implement and integrate this technology, because this is what I think is one of the most disruptive and sort of driving evolution factors we've seen since the railroad. That's right. The blockchain of the 21st century is the railroad of the 18th century. What we see after we had the railroad, we had railroad tracks laid, and we had the explosive industrial revolution, which brought us all the way to where we're at now, with the digital sort of revolution starting in the 70s, 80s, really coming to the forefront in the 90s and early 2000s. And now we're seeing a sort of breaking of Moore's law as technology is improving. We have AI development, but also, what is that word we keep talking about? Blockchain. And we're all here, yes, because we think crypto is exciting, but we're also here because we want to make some damn money in this market. So to do that, I wanted to sort of highlight an area of the market we really need to discuss, because everybody's been talking about it. But is this right here, real world asset tokenization? When you see this little acronym right here, or this abbreviation, RWA, RWA is essentially this idea of tokenizing, fractionalizing different assets. It could be art, it could be property, it could be actually tokenizing US treasuries or tradable assets on the blockchain. Now, why is that important? I have some incredible knowledge I want to drop for you right now, but then I got a special guest I'm going to be bringing into the mix here in just a moment. But let's just, for the basics, let's cover what this is really briefly. Why is this important when we're thinking about this? Increased liquidity and investment opportunities. Okay, this is just a moniker. It sounds like a little tagline in an advertisement, but why? Why is this important? Because when you're able to tokenize something and put it on chain, you essentially, you can see here, by dividing these assets into digital tokens, tokenization enables the sale and purchase of fractional interest, facilitating transactions that would otherwise require significant capital and involve lengthy, complex processes. Okay, Kelly, what does that mean? Simplified. Okay, you want to invest in property. You're going to, in this day and age in the US, average family home is at $460,000, $480,000. What if you're trying to get involved in real estate? What if you're just trying to basically participate in something that's had such a high barrier to entry? Well, with fractionalizing these, basically making these investments fractionalized opportunities, you can diminish what that barrier to entry is, providing a lot more access to a lot more people. Now, this is also true with art. Think about the Mona Lisa. Think about, a collectible from Jimi Hendrix guitar collection. It doesn't matter what it is. And most importantly, we're already also seeing this in the financial sector with financial assets getting basically getting tokenized as well into RWAs. And this is important because this shift increases the velocity. Remember, velocity, this new millennium, everything is about velocity, the speed of momentum. And so we can see this shift increases velocity of transactions for these assets and enhances their attractiveness to a broader range of investors by reducing entry barriers and providing more flexible investment opportunities. Tokenization of, for instance, property assets has made investments in real estate more accessible, providing a level of detail and ownership that was not previously possible. Now, some of these things that we're discussing here, it's not just, again, real estate. It's not just Ondo, for instance. Ondo is very much about tokenization of US treasuries and these other financial products, but there's so much. Not an expert in this field. So with this, I'm going to bring in my co-guest today, Mr. David Packham, who's also the CEO of what I think is maybe one of those next big, huge plays in the RWA space, because they already have so many different stamps of approval, licenses, and I'm not even going to talk about it. I'm going to let David. How you doing? Hi, thank you for being here. And I feel like you're okay with me picking your brain a little bit on this RWA narrative and why it's important and where it's going.
Hey Kelly, yeah, it's a pleasure to be here. RWA is definitely, I think, been the end goal for the industry for really as long as I've been in it, since 2016. So even way back then, people were talking about let's fractionalize real estate, the potential here for an illiquid asset class to be able to get that out there and be able to issue it and distribute it directly rather than having to go through really complex structures and then liquid trade it like we do stocks and shares. I mean, the potential's enormous when you even just think about one use case like that. But since that time, we've seen just a massive growth with NFTs and meme coins and various other innovations like automated market making through things like the Uniswap protocol. Well, we've really realized actually you can integrate all of this and do this for far more than just real estate. Yeah, I mean, you've touched on some of it already with things like fine art, or we have several clients doing things like rare spirits. So high value whiskey in Japan and Scotland come to mind, right? Now, think about the problem of that. If you want to get exposure to something like that right now, you've got the problem of physically storing it, having to buy it outright, the security aspects around all of that, not to mention the illiquidity of them being able to sell it again later at something like an auction. Yeah, it's very clear when you look at that ability to just chop these things up and get to an end vision where we can straight through just take a small proportion of that in as part of our wider portfolio and then be able to sell it again is a compelling driver for why we're seeing so much growth in this area. And I think why it's one of the big narratives of this cycle.
Well, on that note, I've got a question for you since you are a co-founder of an RWA protocol. When I pull up this different data, for instance, I think it is this button right here. Yeah, this button right here. Looking at this is a list on CoinMarketCap of just RWA asset tokens, and we have so many different things here. Avalanche, Chainlink, ICP, Maker, VeChain, Ondo, Quant. What I'm seeing is a lot of layer 1, layer 2 solutions that can broadly, let's be honest, smart contract solutions can be used for a lot of things. So when we scroll further down the list, you see things like Proppy, and you come down Swarm Markets, tokenizing those financial assets, and so on and so forth. How does one make a distinction? Is there a distinction to make when you have all these different assets that are kind of being lumped in? And what I feel like similar with AI, that there's narratives that some assets start to basically highlight. We can also do this. Is there a benefit to having a basically narrow focus specified RWA token for a specific reason versus something broad like an Avalanche or a Polkadot or something like that?
Yeah, so there are advantages and disadvantages with something like this. So if you focus very specifically on one thing, you've got the ability to then put laser focus into doing the best delivery of that. And we have a partner called ACX, for example, that focuses exclusively on carbon. And they are therefore a great liquidity venue and distribution partner for us with a lot of our carbon clients right now. But the problem of this and not specializing is to actually ask yourself a question: what are the legacy asset classes that we talk about today? What is a real estate asset class? What is fixed income? What are derivatives, et cetera, et cetera? And the answer is these were things that were defined by the financial service industry over the last sort of 70, 80 years and handled internally as different groups where sets of rules were applied to them. But with digital assets, generally, they're highly programmable, highly configurable. You can quickly create a digital asset, a real-world linked asset that is backed by real-world assets that blends, and it could have derivative-like properties, it can have insurance properties, it could be fixed income-related payouts, and it could give even things like voting rights and other things. So suddenly you're in this weird place where, damn, what is this thing? It's multiple asset classes all combined because the technology enables you to actually bespoke create something, and it's still liquid tradable, right? You can still fractionalize it and trade it like that. So I tend to look at, and certainly the design philosophy we've had at Chintai is to not limit ourselves to any one single asset class, but to be prepared for a future where assets are handled far more dynamically than that, and products can be structured in a far more dynamic way. We are built to handle the conventional asset classes because we hold licenses with MAS in Singapore. which means we can trade security tokens and so on and issue them as well. But really, we are looking at a much bigger future where we're not limiting ourselves, constraining ourselves to only one thing. And that's generally because a lot of our clients are not looking to do just one thing. Some of them might do, for example, sell some equity in themselves. Then they might want to issue a bond, which is a way of issuing some debt. They then actually maybe want to use the platform to carbon offset because they can raise some money there, or they want to do some things in a completely different area where they're disrupting a new industry. And all of these require a forward thinking, I suppose is the right way to put it, where you actually have built out the flexibility to construct these tokens and really put parameters into them that meet the needs of people innovating. Because it's not us that's innovating, it's the clients that are doing the innovation.
So me as an investor, I'm looking at this and I'm hearing some of the things you're saying and I understand it, but I know that the majority of people that have entered the foray into crypto and a lot of people, even in the traditional markets, retail is somewhat dumbfounded by some of the deeper intricacies of thinking about the derivatives markets, tokenizing US treasuries, getting fractional ownership of real estate. When I'm looking at this RWA narrative as sort of a piece of the puzzle when I'm investing, and I can weigh my options into investing into crypto gaming or into layer ones for the ecosystems like Ethereum or Polygon or Avalanche. But then we have this RWA narrative that everybody out there in the crypto influencer space is saying this is the next narrative. From an investment standpoint, have you looked at any numbers? Because you're a founder or co-founder of a truly RWA focus. That's the mission. It's not like something that migrated into it because you're also a smart contract. We're doing RWAs. You must have some data about sort of the size of where we're at in the RWA market and any sort of idea or projections into the future of, where is this space truly expected to go on a conservative and maybe more of an aggressive approach? What do we have to look forward to potentially in this market?
Yeah, it definitely is a drop in the ocean of where we are today versus the long-term potential of this. I mean, we've looked at this from an asset class basis. And if you take an example such as, say, carbon, right now, very little of the current carbon market is tokenized right now, and even the size of the current entire global carbon credit market is something around about 200 to 300 billion. It's estimated to hit $10 trillion by 2030 for an idea of growth potential of where we are, 10x type growth. All of that will move 100% on chain. There is absolutely no doubt about that, because the carbon credit market is an example of why it lends itself so well to RWA tokenization technology. Is corrupt. You get the reselling of carbon credits. They call them stale, which means they get sold over and over, and they're not offset properly. In other words, you sell them once, then you manage to sell them again because the buyers don't know better. So you need, obviously, faith in a system that works. That lends itself extremely well to blockchain technology, where you've got that distributed ledger, you've got the mint and burn functionality encoded as part of the usage mechanisms, and so on and so forth. So that's one example right there. You've got a $10 trillion industry that's coming in as a segment of RWA. Then look at the size of something like the bond market. We are doing several bonds with a sovereign wealth fund that's in the Middle East, one of our clients and partners. The first one is going to be $200 million, for example, in size. That's coming up later in the year. They're then going to be doing continuous issuances. But if you look at the size of the global bond market, 100 trillion, 120 $1 trillion in terms of size. It's the largest. Yeah. So really, when we think about the total size of the crypto market right now, it's a hell of a milestone that Bitcoin sits around about $1 trillion market cap, and the whole market's at what, 1.4, 1.5 trillion dollars right now as well. It's massive, right? It's a very, very big number. But actually, if you think about that, that's from merely tokenizing more abstract things such as L1 networks primarily, and then various experiments within those ecosystems of those. If you actually take a look at that wider, larger picture about the tokenization of RWA, it's an enormous increase in the size of the ecosystem. It goes from being 1.4 trillion to conceivably 100 trillion dollars over the next decade, realistically. Now, before anybody gets too excited, what does that mean from an end user perspective? It's not going to be equivalent to when we were, launching Ethereum and it went from single dollars in late 2016 when I got into the industry to where it is today. It's a very different paradigm, because if I'm issuing, say, a bond, it's priced, it's linked to real world assets. You as an investor are not going to be getting this kind of startup like, upside of that. And those type of returns. You're going to be looking at this more from the perspective of sitting in your wider portfolio, where you've got 5% exposure to meme coins and shit coins. You've got 10% exposure maybe to startups, because you're that type of investor. You've got a load in blue chip crypto, a load in altcoins, and then you've got maybe 25% in RWA, because it's a different set of asset classes that's going to really spread your risk, give you a different set of returns. It's going to give you maybe just continuous income. It's going to give you predictability and limits on downside, but also limits on upside as well. So yeah, I think that's how we as an industry will evolve. It's going to be massive growth, but a different set of investment paradigms around these two.
So with that being said, okay, we've kind of danced around a little bit with RWA broadly. What is it that you're specifically focused on with, I was, as I said, was lucky to meet just on a random happen chance with one of your colleagues there at Consensus. And he was phenomenal. He had a lot to say. And I was like, we got to get involved with your team just on the notion of, I want to be around people that know what's going on in this industry, because there's so many false flags of knowledge out there. And so I think the RWA space in some ways actually is bringing in, I don't want to say traditional finance minded people, but people that are looking of industries that are already currently working, and how do we evolve something that's already working to this next phase, which is, putting it on the rails of RWA. As Mark Yusko calls it, TruthNet. You're abstracting away from all these corrupt, multi-linked points of failure, which is what we have in traditional finance now, which also slows down the velocity. And a lot of it can be faked, or you can't verify the true sale or trade between different assets or owners. So with Chintai, what's your team specifically focused on, and why is it important? And is it important to have these various different, like you said, you have some licenses and some approvals from the government there in Singapore. Do we need to be paying attention to those as well? I loaded you there with a lot, but I want to know about what you guys are doing.
So, I mean, there's many different facets to what we're working on, but if you look at it more from the end user client perspective, we're very much about lowering the barriers to mass adoption of this of RWA tokenization and so on. So we want to put the power to be able to configure and issue anything, any type of asset, into the hands of end users as quickly as possible, and for them to also be able to deploy a secondary market as well. We are also particularly focused on that a full multi-chain future where liquidity venues can be tapped dynamically across the DeFi ecosystem, brought onto our own chain, collateralized, and used to deepen the pools for actual yield that's coming from real-world commercial assets. So that's where our Checks Network token comes in. It's part of that gateway process there to interface to that type of thing as well. But ultimately, if you look at where this is sort of all headed, I think that we move to an end goal here where most assets eventually will be able to also be contained on public chains too over time. We're operating a permission network right now because we have to enforce compliance rules right the way across the trade life cycle, and we want everything on chain because it makes complete sense you do that. Otherwise, you end up in situations like the securitized issuance with BlackRock. It looks great. It's $100 million. It's sitting in an Ethereum account where none of the actual active trade life cycle is taking place there, because Ethereum doesn't have baked into the protocol level at present the ability to enforce the kind of compliance controls you need. So, it hits your account. You can do whatever the hell you like with those BlackRock tokens and sell them to me directly, even if I'm not, technically the right kind of person. So we will get to that point, though, with things like Solana token extensions. I'm sure the equivalents will take place elsewhere, where actually tokenization of RWA becomes an app layer on a lot of these chains too. And then it really becomes about the most efficient front-end solutions that can interplay and interplug. And it's going to be very, very challenging, I think, for end users at that point, because we're still going to be fighting various government regulation and oversight, where they're really going to be saying to us, oh, yeah, I don't think you should be making this kind of asset class available to retail. They can't be trusted. They need to be protected from themselves on this. But I would actually counter, there's far less risk from a licensed company like us making available a corporate bond where the information has to go through very precise standards, and we have to ultimately make that available in a very, very precise ways, that any retail investor should be able to look at that and say, all right, I'll take that. I'll take a proportion of that bond. It pays 8% a year. I'm happy to put in $10,000 worth, and I know I can liquid trade it out whenever I want as well. That to me is far lower risk than buying into the latest, let's say DJT coin or something else that's just been launched by a random team. No one even knows what it is. Half the time, the token contracts are not secure, or they've got the ability to rug. Who's actually going to be safer in that scenario as a retail investor? Well, yeah, I would say this is where we as an industry generally will be working with regulators globally to get to that point where we can open up investment opportunities to everybody. Because at the moment, one of the big challenges we have is, think about most of the best projects you've ever seen or best companies. You don't get access to them as a retail investor until very late stage when they IPO, typically, right? Actually, though, why shouldn't you be able to access far more and fund out, I don't know, the next NVIDIA, in theory, as a retail investor, and just say, I'm going to put in $500, right? And so are thousands of other people. But if this thing takes off, my $500 becomes worth $1 million one day, right? I mean, it's better than playing the lottery if you're actually going through and picking high quality companies, and it's serving more purpose too, because it's actually fueling out innovation and growth. So all of this, is I think where the industry starts to move to in the coming years.
And what's interesting about that? I just had this thought as you brought that up. It's kind of shocking to me that we've had the quote unquote investor protections that we've had baked in, especially in the US, and it's even worse in other places where you have to be an accredited investor to, participate in a startup functionality, even if you wanted to only contribute 500 or 1,000 or 5,000. While at the same time in the US, they will allow somebody to spend $5,000 a year on cigarettes. But that's an okay investment for you, right? But you're not allowed to invest in something that actually has some functional good purpose. And yeah, are you taking a chance? Sure. But it just kind of feels like a broken system. And it's nice to see that blockchain is starting to change that. So one of the last questions I have for you here is, as this market is heating up, I think anybody that's been in the market for 2 years or more here in crypto has seen sort of time and time again yet that people are starting to realize that investing or trading, picking a crypto coin because somebody said it, or you think this is the next narrative, people are starting to realize that essentially we are just, very small allocated VC investors in projects that are hoping to achieve some of the principles, some of the mission statements that they had set out to do. We saw this with the 2017 ICO craze, that now we've gotten to where we're at now, and a third or more of those tokens are gone, and the 2/3 or more of the tokens that are still around are still probably only 30 to 40, sometimes 60% along the roadmap to delivering what their mission was. So with that being said, gaming was a hope. RWA is also now a hope, but I see some real world possibility here. Do you feel like this is going to be something that's going to take, for real guts in this industry? Is it going to be this cycle? Are we going to start seeing this? Is it still super speculative? Or are there larger licenses, both local governments, hopping around the world? Is there going to be, because of blockchain and globalization, are we going to start seeing more global finance laws that can sort of provide this sort of more broad fit? Like, how do we estimate, where this market's going in this cycle versus the next?
Yeah, well, I don't see any time soon regulators all getting together and putting together a cohesive series of regulations, for starters. I think the nation states are too busy kind of competing with different philosophies. So that will always be something to have to navigate. I mean, the US is a great example. If you think about, there's one side that's trying to court crypto quite cynically, you could argue right now, because it's an election year, but they saying the right things. The other side's has got a track record of being super hostile over the last 4 years towards crypto and attacking some of our arguably best actors like Coinbase and Kraken and others too. So in a scenario like that, we certainly are looking at licensing as an incredibly powerful tool that's needed to make the full potential for this. I mean, we are investigating getting a broker-dealer ATS licenses in the US at the moment, actually, through various partners where we'll have access to that. That's powerful, though, because we want to give our investor base more choice. So think of it like this. We're talking, so far, we've mostly talked about RWA as it relates to newly issued assets. But there's a whole other subset of RWA that doesn't get talked about as much, but is actually where the main traction in RWA in crypto has come to date, which is it's the less exciting, it's the less sexy stuff, but it's also the stuff that's the most highly valued, like what Ondo have done and what Securitize have done, which is take an existing fund, for example, take a treasury that already exists and tokenize it and put it on the chain. Now, you're not really adding a lot of efficiencies. And arguably, if you look at what Ondo are doing, they're having to replicate everything on the chain back onto a broker-dealer side on the US side. So they're actually adding another layer of admin right now. But it's powerful because it's showing the industry it's possible. And then you've got that additional, trading venue, distribution venue for it. So to me, these all sort of show the potential of where this is going. I think, though, the big transformation and the biggest thing to come in RWA, the next phase of the RWA boom this cycle is going to be when we and other companies like us are doing massive issuances. And by massive, I'm talking hundreds of millions of dollars in size, because as we do these and we fill them and we have them fully filled out, largely before we're going live, because we're having to handle the distribution challenges ahead of the formal issuance. Otherwise, we'd be live with several already. But when that happens, that really shows the industry powerfully. This technology works, the infrastructure works. Oh, and it's much, much cheaper and much more efficient. So then you're suddenly going, well, now we've run out of reasons not to use this technology. And so it snowballs. And suddenly one company comes along and does something, whether it's tokenization of whiskey or a bond or something like that, and suddenly it becomes an ongoing process. And then suddenly we as an industry are snowballing through. I can very well see, for example, in the next crypto winter, whenever that is, and I personally don't look at last cycles as some golden rule because, the last cycle did this cycle is definitely going to do that. I think that's the most bullshit way to get your calls wrong, generally. But nonetheless, when that comes in, I can see RWA continuing to boom because it is not tied to the crypto markets in the same way. If, for example, equities are having a boom period instead during a crypto winter, which has happened before, what we may see is just a massive growth in tokenization of equity-related and IPOs becoming, STOs instead, security token offerings, where we see, instead of innovations that took place last cycle as ways to get around the IPO boom, we instead see security token offerings becoming a norm and starting to fast grow. So all of that's going to be coming. I think for an industry, we should be excited about the potential of this, and it's rightly one of the forefront narratives in this cycle for a reason, because there is massive commercial momentum behind this. I've met with BlackRock at their offices in New York late last year, for example, and we talked RWA in detail, and they were open about not having a particularly defined strategy yet, but wanting to cherry pick and invest in lots of different companies in the space because they do see the move towards this tokenization as both a massive threat to their existing instilled incumbent position, but also just because they can see it's highly innovative and that there's going to be new opportunities for everybody in this space. So, yeah, for me, I think anybody who's kind of watching this and isn't sure should be looking at RWA as one of the biggest areas. And I think there are a multitude of ways you can kind of get exposure to this, from obviously participating in issuances taking place or deciding to add, say, some Ondo treasuries into your existing portfolio as part of your wider offerings, or you can instead look at the protocol layers as well. I mean, one of the reasons we have a protocol layer on linked to our network, the checks token, is because We have the ambition over time to decentralize the network fully and have it sitting, integrated into DeFi. And for that, you want a widely, fully distributed token that benefits from the network usage. So the more of that kicks in, the more of that is going to actually fuel ongoing buy pressure off the market. We're going to be burning additionally as part of that process too. And then there's yields from check staking, which kicks in later this month when that goes live, which are all going to be linked to the commercial traction and deals, right? So it gives, for us, that's important because it gives retail level, who are currently kind of excluded from the RWA party in terms of being able to participate, an opportunity to do that with a utility token that actually is going to give them a piece of the action. And I think that's what's great about tokens generally, is that we can find ways to creatively, as an industry, give all investors a seat at the table. That is, for me, one of the most exciting things about this whole space is that, you get bad tokenomic design, but you also get very, very good tokenomic innovation. And I love to be a part of that journey, whether we're right or wrong on it,
There's so much, we could talk for another 2 hours on this, but one of the things that really stuck out to me there is, some people are going to be, the majority of people even watching this channel, they're not 100% in RWA. Right? They're going to get some allocation in their portfolio to this, but this speaks to actually back to what I just mentioned about the VC, the venture fund nature that most people in the market are not realizing that they have been for these different projects as they're throughout their journey in the space. And you just said something that was beautiful there. And I think this is where the market is going. The RWA token niche, is really exciting, and it's going to happen with other niches as well. But once you start having things like Chintai, checks, right, swarm markets, Proppy, you have all these other things that are intrinsically by nature tied to the real world asset. We're going to stop having, I think, so much of the entire cycle in crypto with the majority of, 90% or more following the same boom and bust cycle, because you might, as you said, be having a crypto winter, but if you're basically in your portfolio, you have some allocation to something that's directly tied to U.S. Treasuries or to the carbon market or so on and so forth, it actually broadens out and flattens out the risk in your portfolio, because things are not just tied to boom and bust of crypto as a hope. And I think this is starting to change in the market already. And as you said, you nailed it on the head, David, regarding looking at past cycles. As a TA analyst, we're doing that regularly. And I'm already noticing that there's the nature, the composition, the underpinnings of the market have changed so much. I mean, even in the last 24 months, things have changed so much. It's hard to look back at left and go, this is exactly what's going to happen, because there's entirely different players, and not just different players, disproportionately massive players that have entered the foray. And because of that, I think the shape of the market and the cyclical wheel that we've seen previously of capital flow through, Bitcoin to Ethereum, then top layer ones, and then mid caps, and then meme coins. We're already seeing this cycles with meme coins just popping up at every different part of the market cycle, just huge capital flowing in. And, it's an exciting time. And I'm happy I could pick somebody's brain that, goes and sits down at the table with the BlackRock boys, launched, co-founded your own RWA token and actively participating. We need more discussions like this in the space, not just people like me who are out here just talking sometimes out of our ass. It's like, no, let's go to the source, somebody that's building. So I appreciate your time. I appreciate your thoughts. Is there anything you wanted to close with, whether it has to do with what's coming up with checks or with Chintai, or just general thoughts on RWA?
Well, I think, just to close really, for me, a big part of what we're doing with Chintai Nexus, the more DeFi-facing side of the network, with the launch of the checks dashboard and staking coming online, is it's the first stage upon which DeFi users can come on board and eventually are then going to be able to also onboard USDC, USDT as well. And they're going to be able to then take positions in things like mirrored stock tokens. So we're going to be adding things like Nvidia, Tesla, Apple, you name it. The reason we're doing that, by the way, is not because it excites me potentially they're already very efficiently traded and liquid traded, but I think it's about giving as much choice within the ecosystem as possible so that crypto investors themselves don't have to take money out of the crypto ecosystem to get to future-proof themselves. Think about it like this. Remember the last cycle where we all decided, oh, wow, actually, we peaked. We're going to go down into, we're in a crypto winter. What generally do people do in a crypto winter? They put everything into Tether or USDC because there was really nothing else safe. They deemed it out, or they pull it totally out. And during that time, of course, look at Nvidia as an example of this and what it's done from the point of the start of the last crypto winter to now. And think about its performance. Wouldn't it have been nice as an asset class if we went, that's fine, I'm just going to take my money out, put it into Tether for now, and then I can just get exposure into some of the biggest companies in the world, because I feel like these asset classes are actually going to be outperforming right now. Or maybe it's bonds, or maybe it's carbon, whatever. But the point is, I think that's where this is all generally going. And for me, then, you kind of have to look at a future where all of us have at our fingertips the ability to trade these different asset classes alongside crypto very, very dynamically, very liquid, very efficiently, and very cheaply. And also then we're going to have other options as investors. So no longer are we going to just have to suck it up and watch State Street and other massive providers provide liquidity. You're going to have an option where you can just generate a load of additional capital in the way we do currently on things like Uniswap and elsewhere by providing liquidity to these real world asset pools as well. That's going to become a big revenue opportunity for anybody becoming a professional, liquidity provider to real world assets, right? You're going to be able to simply take your gains and rather than just randomly gamble them on something, say, all right, now I'm going to just park it in liquidity here and it's going to get me fantastic returns compared to most things and be a very secure way to do it. So all of that's coming. I think is a lot for the whole sector to be excited about. And then we get to a future where, you and I are having a conversation in a couple of years' time because BitLab Academy is ready to do it was going to do an IPO, but instead it's going to do a security token offering where the viewers can buy, 15% of the company and hold a proportion of that, and they can liquid trade in or out of it depending on what they want, because they want exposure to back you and you're raising capital to expand to do all sorts of other things. So you see where this goes. Ultimately, it gives all of us as entrepreneurs and investors power and options. And that's why it's such an exciting area for me.
So last thought here, do you foresee in the next, actually give me a time frame. Is it possible that the way markets trade as they are, we have the stock markets and both locally and globally, is this on track to be displaced by everything being tokenized and only being blockchain traded marketplaces? Or will we have a little bit of a duality for, the next 15, 20 years, because who's going to do away with the stock market because it's so entrenched?
Yeah, it's going to be two things. So there's going to be people like us that effectively mirror and provide access to the underlying asset, let's say NVIDIA, for example, tokens. And they will be, tradable 24/7, fully one-to-one backed, operating, in a marketplace that gives people the ability to do that. But they are not traded, therefore, directly back to the underlying exchange itself, because of the nature of it. Most of the financial institutions I've talked to do not want to lose control of what they've got. So they are very focused on an eventual move to moving all of the current exchanges to tokenized form. But they're not going to operate on public chains. They're going to operate on a chain they fully control, like an industry chain, you can call it. And there's nothing wrong with that.
But you know what? What shocks me is the level of evolution technology has gotten to now with blockchain and Bitcoin, and basically the speed of immediacy that we have comparatively with the legacy financial systems. And you think about the banking system in the US and SWIFT, for instance, they're basically running on computer systems that were designed in the 70s. And similarly, when you talk about the stock market, it's amazing that, this next leap, because I see it as an inevitable that it is going to take a leap to the blockchain, but I agree with you wholeheartedly. They're not going to launch they're not going to move the New York Stock Exchange onto Avalanche or onto Chainlink or onto. It's going to be something that's privatized that may use some utilities for, like, for instance, Chainlink with the Oracle, data aggregation and et cetera. But the layer that it's on, it's not going to be a layer on top of some other chain that they have no control. It's going to be probably not even a tradable chain. It's going to be just a function chain that they maintain full ownership and control over.
Exactly. And just to finish off on that, what will end up happening there, in my view, is that you'll end up with the main DeFi system directly competing with the industry. So what will happen is the industry will deploy on-chain, let's say the New York Stock Exchange, as it stands today, and it'll still be regulated in the same way with similar costs, just higher profits. And then, we all come in and say, yeah, but you can do that, or you can list directly with a platform like ourselves, do the issuance out to the same end users, operate a secondary market that trades 24/7 with licensing, and it's a fraction of the cost. So suddenly they're then in this big problem where, we're now competing with thousands of other issuance venues, and they're all interconnected through the blockchain ecosystem of multi-protocols with Chainlink and Fireblocks and all these other ways of moving tokens around securely. That's how you disrupt an industry, kind of with a Trojan horse, is an analogy, because ultimately they're having to embrace the technology because they can't not, but they're also opening themselves up to a future where they are really going to be facing open competition from the entire world.
Daft Punk said it best: better, faster, stronger. You cannot compete. Exactly. You cannot compete with the notion of, yes, there's so much things entrenched in the traditional sector right now, but you cannot deny the speed and accuracy by which blockchain offers. And I think it's a natural evolution. And we have to remember, we don't think of it this way. We have to remember that the New York Stock Exchange is essentially a distributor. That's all it is. It's a distributor. It's a marketplace of distribution of assets, a collection of those assets. And what we're seeing, as the RWA sectors roll out, you're right. I think some will straddle and be in both, one on the main, paper analog systems and tokenize on the new blockchain system. Some will only be on the blockchain systems. It's an exciting world. I'm happy that I think it's lucky that I found my way into this industry. And everybody that's watching, all you out there, remember, do not think that you are late to the party. You are so far ahead of the curve. And as he just said, just the RWA niche itself will be a multi-trillion dollar industry. That's not even accounting for the rest of the crypto industry. We have so much room to grow. We just need to remember that it's okay to take some bruises along the way. The longer that you're in this market, you realize you look further out, you don't mind a 5% dip, an 8% dip. You should be buying and investing in things you believe in and doing diligence on. So that's all I got. Anything else you wanted to wrap up with?
Only to say, once you've gone through a few cycles, some sideways action and a 40% dip or whatever in the markets doesn't even faze me anymore these days. I appreciate for new people, first cycle, they probably find the volatility in crypto quite overwhelming, and a lot of people can't handle it. But for those of us that have been here and seen this multi times before, it's moments like this where I get insanely bullish on the potential of the industry, because we've got massive players coming in, we've got ETFs all over the place. We've got really powerful commercially driven narratives. We've got licenses for the first time as an industry. It's great. We are going to change the world as an industry, and we should just we should be focusing more on the positives and less about the damn price action, quite honestly. But that's not how we do it.
You're speaking my language. Every single day on my live streams, on my shorts, on everything, I say, hey guys, if you're frustrated right now, you're focusing on the wrong data point. Price is only a data point. Look at the broader data and understand we've got so much room to grow. And again, David, I appreciate you being here. Everybody, this is Chintai. You can head over to chintai.io if you want to find out more about what they're doing. They've got some really great things that they're stepping into. They've already got some localized licenses over in Singapore. They're working on other stuff. They've got incredible partnerships and things in the works with other major players in the space. You heard it from the horse's mouth here, somebody that's building in the RWA sector. future. This is a multi-trillion-dollar industry, and it's only right now in the small billions of dollars. So get out there, do some diligence, figure out where you want to place some horses in the race, and realize, have a longer-term view. With that, thank you so much for being here, David. David Packham, everybody. Is there anywhere they can find you, or any specific links you want to point them to?
Yeah, my X handle is at GunnisonCap, GUNNISONCAP. Don't ask why, but yeah. So other than that, that's probably the best place to connect in with me.
So as he said, it's right here at GunnisonCap. This is where you can find. And I don't know why I'm not following you. We're sitting here having a conversation. Followed. Make sure you follow him. A brilliant mind in the space, building out. And everybody, remember, look long term. If you're feeling frustrated, get outside, hug a tree, kiss a friend. And this market, know that it's so far ahead of this market. With that, everybody, have a wonderful weekend. Thank you for tuning in here on BitLab Academy. Hit that like button, hit that subscribe button, and of course, ding that bell. That's all we got. Adios, muchachos.